Welcome to the Estate Made Simple podcast with Jenna Carbello and Gordon Vanderleek. We are on a mission to simplify the world of estate administration, helping executors gain the knowledge required to manage an estate. Please note, the following is for informational purposes only and is not to be considered legal, tax, or financial advice. We recommend you seek individualized advice for your unique situation with qualified professionals.
Welcome, everyone, to another exciting episode of Estates Made Simple. We are talking today about all things estate administration and charitable giving. As executors, we may be required to either set up a private foundation on behalf of the deceased, or set up a donor-advised fund, or work with charities to carry out the deceased philanthropic wishes. So we wanted to provide an overview of these structures so executors have an understanding of these differences while administering an estate. So we are pleased to introduce our special guest, Ian Currie of Canada Gives, a nationwide donor-advised fund to help Canadians go through these planning topics. Welcome, Ian.
Thanks for having me. Appreciate the invitation.
So before we get started, Ian, if you don't mind sharing a little bit about Canada Gives and your role within the organization.
Yes, certainly. So Canada Gives is a public foundation that was registered with CRA in August of 2005. So we're coming up on our 20th anniversary later this year. So we're pretty excited about that. My role with Canada Gives is the really Western development. So I work with a lot of advisors, whether it be investment advisors, accountants, people in your industry, lawyers, to learn how they can have the conversation to help potential donors set up donor advised funds to help with their philanthropic giving now and later through their estates.
And I think that topic has come up more and more, right? I think it's general in this industry. The whole concept of donor advised fund is, I think, more recent in time. And it'd be helpful to maybe get into now a little bit of the weeds or the differences between when somebody says, I want to set up a foundation or I want to set up a donor advised fund, and how that interplays with Canada Gives. Can you just walk our audience through what those terms mean and how they differentiate from each other?
Sure. I'll start with a bit of an overview of registering a charity in Canada, because ultimately that's what foundations are. So there are basically three different ways you can register a charity in Canada. The first one can be you are a charitable organization. So the charitable organization is the boots on the ground, those with the projects. They're the ones getting their hands dirty, administering the generous donations, whether that be physical donations or cash, securities, those types of things, to those that need them. Then there is the private foundation, which by definition, people that are not operating at arm's length from each other. So this is almost single sourced money. This could be a family, this could be a business, this could be a family with a business, but typically most of the people in that organization don't operate at arm's length from each other. And so they are funders. They have a pool of capital that they want to disperse to charitable organizations. The third way to set up a charity in Canada is as a public foundation, where the difference from private is that these are folks that are operating at arm's length. You don't have the majority of staff and people involved with that charity operating not at arm's length. So they are different people from different families, all part of the same organization, moving things forward. Donor advised funds tend to be accounts underneath a public foundation. And that's just an opportunity to incorporate more people into the mandate of that public foundation. So in order to set up a private foundation, you tend to need some scale. And it really depends on who you talk to in terms of what that number is. That could be 3 million, 5 million, it could be more than that, in order to find the economies of scale for the setup costs, the ongoing accounting, all the moving parts of that organization. So when people are starting foundations with less capital than that, may not be the best fit for them. And that's often when we see people leaning towards public foundations, the donor advised fund offering within that, to give them the foundation feel and moving forward with their charity without having to go down the road of the private foundation. But interestingly enough, those names are kind of misnomers. There isn't anything very private about a private foundation. It's all public record. The financial statements, the gifts to charities, the people that are involved through board of directors and things like that. So it's a wide open box in that sense. But the public foundation, if you have a donor advised fund, is actually quite private. Nobody can see inside the box. All they see is, in this example, Canada Gives. They don't see the individual donors. They don't see how much is in each of their accounts. They don't see where the grants are going specific to any of those donors that have the accounts with the public foundation. So it's a very interesting way of naming those two charities and then how they're used going forward.
I think those are important considerations. And that's what, listening to you, that I think is relevant to say just the startup costs and the maintenance and overhead associated with doing a foundation yourself. Or why not be under the umbrella of Canada Gives to be able to say, I can do a donor advised fund, and it's just a lot simpler. And as a result, you're going to have more money going to the charities than if you have to say, we got to fund this overhead. And then who's going to maintain it going forward? Are somebody's kids going to want to do it? So I think that's really where it's taken off. And I think there's been a lot of acceptance of the donor advised funds, or a nice uptake. Is that your experience as well, that you see this resonates with people, the message you just gave?
Still, every day I speak with people that say, I didn't know anything about donor advised funds. Is this new? But they're not new. So they've been around in Canada for 20 years. We were the first completely independent donor advised fund in Canada. There was one bank owned or bank associated one that was started the previous year from us. And then they've been associated with community funds for a long time. In the United States, donor advised funds probably predate us by about 10 years in terms of the financial institutions or the independent versions of the donor advised fund. So they've been around in North America, just a little bit less in Canada. So every day I talk to people that are interested, having never heard of them before, and it's something resonates with them. But a bit of a dated statistic now, about 2 years ago, there was a report that was published by Canadian Association of Gift Planners and KCI that basically said that 9.8% of all tax receipts were issued to donor advised fund holders. And that's a number that's been growing. So if you think 10% of all tax receipts going to that entity for giving, it's pretty powerful. I can't wait to see the new updated figures and see how much it's growing. I don't actually know what that number is yet, but I'm looking forward to finding out.
So the donor advised fund is part of Canada Gives, which is a public foundation. When you're setting up the donor advised fund or naming it, can you use the word foundation, or do people call it that?
All the time.
Yeah.
So people will say foundation, they'll say fund, they'll use a number of different words to generate the, I don't know about the message they want to give when they name it. So they can choose their name on day one, and down the road, if that were to change for whatever reason, they could do that. It's not a legal entity. We don't have to file it with CRA. We don't have to meet with a lawyer to register it in any way or pay a fee to have that name. So it's entirely possible that there are more Currie foundations than just one or something along those lines, but it's quite easy to name it whatever you like. And some people get very creative. Some people keep their family name in it. Sometimes they use first and last names. And sometimes it might seem completely random, but it'll have some meaning to the donors in terms of their mission and their message of giving going forward.
A couple of things that really stood out to me in our last conversations, Ian. One is the speed in which a donor advised fund can be set up versus a private foundation. The donor advised fund, as you mentioned, could be done very quickly, as a private foundation can take months to register with CRA and possibly over a year. And then the other thing, which I think is important to mention, is that donor advised funds can be converted into a private foundation if it's more reasonable for the family to continue in that manner going forward. So I think it gives a lot of flexibility for people to set up a donor advised fund in perhaps a good year from a tax perspective, and then grow it and then see what they want to do going from there.
Those are really great points. In order to open the account, the actual donor advised fund itself would be done the same day or the next day. It's just simply a small application form that says who the donors are, the name they'd like to assign to their account. If they're interested in naming some successors to their account, they can do that on day one, but they could certainly think about that and do that in time. And then basically signing it, providing some ID to show who they are to set it up. It's really that easy. So we can do it very quickly. Then the next step really would be how to fund it. So the cash donation of securities in kind, those types of things. So it really is available to be set up quite rapidly in position to how long it takes a private foundation, which is definitely many months. And that's just to get it registered. And then they have to be prepared to do the work that they want to do with the foundation. So it is a big endeavor. So the good news is that money can flow into a private foundation and money can flow out of a private foundation. So that's really a grant. So when we talk about donating, that's any money that goes into a charity, whether it's a charitable organization, private foundation, or public foundation, and that gets tax receipted. And then once the money is inside that charitable organization, money flowing out of it is a grant. And that grant is a grant to another charity. So if you have an account with Canada Gives, you can grant that money to a charitable organization, or you can grant that money to a private foundation, or potentially even another donor advised fund account. And then vice versa, it can flow the other way. So the idea that you could, as you outlined, start with a donor advised fund, get some scale there, some bigger donations, and grow the account, and then be ready to move it over into the private foundation. You can do that as a grant of all assets within the donor advised fund, and then it would be received by the private foundation. And then to Gordon's earlier point, you might have some people that set up a private foundation and no longer have the capacity or interest to run the private foundation anymore. It's simply a lot of work, or the donors are gone and the next generation is looking to take over it. And they're like, I'd love to carry on the legacy of this foundation, but I don't have the capacity to run a small business or a small charity is really what it is. They could take all of the assets, grant them to a donor advised fund, again, that could be set up very quickly, wind up the private foundation, and just carry on with the charitable intentions through the donor advised fund. So it is actually quite easy to move money between those two entities for sure.
And when someone is establishing a donor advised fund or a private foundation for that matter, what sort of decisions do they need to make in order to go through the process and have it set up successfully?
Yeah, I would say probably a lot of answers to that question. But really, I think the idea of having a foundation, whether it be through a donor advised fund or through a private foundation, it's about organizing their giving. It's about being more intentional. It's about being a funder as opposed to just somebody that's writing checks. And with the intention to be more organized, more intentional, to be more of a funder than a check writer, then one of those types of organizations would be potentially a really good fit for them. So if they're doing the private foundation, they're really going it alone, so to speak. They're taking on all the decision making and all of the compliance and administration on their own shoulders. And that's great. Depending on the size of their account, they may have to hire somebody. That's maybe where an executive director comes in or somebody along those lines. But through the donor advised fund, they can have those intentions and they can lean on the staff at the donor advised fund provider to help them with that. We have those that come to us that really don't know how to give or give to or how much. So we can work with them right from start to scratch to develop a mission statement for their foundation. That mission statement is powerful because it really helps them know how they're going to direct those funds in the future, which charities will receive those. So it'll identify some causes and we can help them extrapolate and get that on paper, but then we can help them identify the charities that fit within those causes. So that's a really great exercise because people really start to dial into why they want to do this, what's important to them. They're typically leaning on past experiences, family members who have gone through a situation or that's been very deep and personal to them to identify those causes and therefore it was charities. Yeah, it's really a great way to go.
And if there's an amount of money that's, let's say, is the executor of the state is setting aside some money because that's the stipulation in the will, right? So they're charged with doing this charitable giving and establishing a donor advised fund. So presumably then there's an issue of who's going to invest the money, right? And we got a chunk of money going, well, here's $100,000. And what do we do with that? Do they have to sit there and do all the investment decision? Does Canada Give provide that support? To walk us through how the investment of this money is managed through the donor advised fund.
Sure. Yes, absolutely. So the first point to remember is that when they make that gift and open up the fund and then make that donation to get it started, they're giving the money away irrevocably. So the money now sits with the charity, in this case, the donor advised fund provider. So they actually can't manage the money. There has to be a mechanism for investment management with the advised fund provider. Our way of doing things is to ask the donor if they have an investment advisor, a portfolio manager that they would like to nominate to do the investing on behalf of their new foundation. So we would then work with that portfolio manager to open up the investment account and manage those assets based on the rules that CRA puts in place for charities to be a prudent investor and not take on too much risk. Now, there are other providers, such as a community foundation, that may not give the option for somebody to nominate their own portfolio manager. They have some of that in-house. So if you're working with Edmonton Community Foundation or Calgary Foundation or such, they would have those investment pieces already in place. They take on that responsibility through professional institutional money managers and an investment committee within the foundation to do that.
And changing topics just a little bit, the thought of a disbursement quota, I think many people know about, but maybe you can provide an overview of what that is and how it differs between the requirements for a private foundation versus a donor advised fund account.
Sure. You're right. Yes. CRA says there's a minimum that has to be dispersed from every charity every year. The rule is, at this point, charities with $1 million or more in assets need to disperse 5% every year. Now, unfortunately, it's not quite as simple as 5%. They have to have a formula involved. And so what they do is, as of December 31st of every year, the charity has to calculate 5% of the average value of their assets over the previous 8 quarters, so the previous 2 years. So once they have that 5% number for December 31st, that's applied to what they need to disperse the following calendar year. So the private foundation, if it averaged $1 million, would have to disperse $50,000 in the next calendar year. And then they would redo the calculation at December 31st again. For the public foundation, like a DAF provider, the 5% is based on, in this example, Canada Gives, not at the individual account holder. So Canada Gives needs to disperse 5% of their average balance as of December 31st. And then the account holders, basically, it's a recommendation in terms of what they do, not a mandated minimum amount. So we provide that number to all of our account holders in the first quarter. We do the December 31 math, and then we put it right on their statement so they have line of sight of that 5% number going forward. The vast majority of our donors disperse quite a bit, typically north of 20% on an annual basis. So we have the ability to actually carry forward a surplus. So if there's a shortfall in future years, we've got a surplus that carries forward. It's similar to making a charitable donation and having the ability to carry forward it up to 5 years. We can do that with our surplus. So for donors that can't or don't want to make that 5%, we have lots of wiggle room for them. So not a CRA requirement, but a strong recommendation with some exceptions available.
I think that's really great, even considering markets go up and down. And so maybe in a given year, if the markets were quite low, maybe it makes sense to defer the gift until the following year. So that's really great flexibility.
Yeah. Any end date for these donor advised funds? Can they go on in perpetuity, or they have a shelf life? They got to be wrapped up by a certain date?
No expiry date. So it's really about the assets and the intentions of the donors. Once the account starts to wind down and become more of a nominal number, it may make sense to start to make decisions on winding it up or topping it up. And so that's a decision that would be very unique to each donor in that sense. But there are certainly those that have the idea that it's going to be a long-term legacy, and they might stick very closely to that 5% disbursement mandate. And therefore, if they're getting a 5% disbursement and a 5% rate of return or better, then this is an account that could last for a very long time, which is often the intention because many donors want to engage multiple generations in the charity that they're doing. So we see 2 and 3 generation families working together to make their grants to various charities. So they'll identify charities. Sometimes each generation might have a slightly different idea and they'll support that, or they'll make more democratized and put it to a vote or something along those lines. And at the end of the day, the majority rules. But it's really neat to see them each have their own experience in terms of how they come up with that number and what that longevity looks like for sure.
It's a follow-up question I have would be with regard to timing. And if we're looking at it in the context of an executor or administrator setting up a donor advised fund as part of the mandate they have for the distribution of assets in the estate, do you have any thoughts as to when they should do it? Because the benefits we talk about, particularly the tax receipt that would come from where the money comes from the estate to Canada Gives to this particular fund, I think there might be some best practices with regard to the timing of that and when it's received. Do you have any thoughts on that?
Yeah, without a doubt, establishing the account sooner rather than later makes the most sense. And then having those instructions in their will to back up that decision, that's really important. So when possible, is making that decision, having a conversation with their legal advisor to craft their will in such a way that it gives the executor the ability to make those requests to the donor advised fund, and then it could be dispersed from that entity. That's actually a really important decision because there are challenges in naming individual charities in a will. The will is a public document, and if you're making a gift to charities, they can request copies of the wills, and they'll do a deep dive and they'll make sure that they are receiving what they're expecting to receive. And that can be a slow process as they do their review and adjudicate the gift, the way the will is worded. And sometimes one charity can take longer than another, and until they all sign off on that, then it might slow the process down, particularly if they were to challenge the will. So some charities might be waiting longer than they might expect to do. So by naming a donor advised fund in the will and then having that list of charities held at the donor advised fund provider makes the process of the estate much easier and simpler and hopefully faster. It also allows them to update that list at any time without a legal change to their will, because we would just hold it as a letter of wishes, and that letter of wishes, not being a legal document, can be updated at any time. So that can simplify the process an awful lot. So sooner is better than later. We, along with other providers, I'm sure, have the ability to have an active account. So you can make a donation and disperse while you're still here, or a testamentary account, which is basically unfunded until the time of death, and then the gift comes from the estate. We see on occasion where we'll have a testamentary account that's established and somebody starts to decide they want to donate early. They're not going to wait until the assets are only coming from the estate. They want to do something while they're still here. So we can wait that up, so to speak, receive that donation and give them some active granting while they're still here. And it can still receive assets from the estate. So we love when there's a proactive approach to that giving, but we recognize that's not always the case. And so if the language is in the will for the executor to lean on a donor advised fund provider to do the gifting that the deceased wants to do, then we will help them with that for sure. And again, it could simplify things in the estate for the executor. One tax receipt to support multiple gifts is not a bad thing for the executor or for the accountant.
I like your comment about the speed of which, because in general, if you're looking at that final terminal return, that's typically where we have increased tax liability, right? When somebody passes away, there's typically a higher obligation to Canada Revenue Agency. So ensuring executors, our listeners, get good accounting advice as to the timing of that tax receipt to mitigate a check you have to write to the receiver general when you're that first date of death return. So if you can set it up, so that's a material advantage in my estimation to a donor advised fund. For the executor can cut that check sooner rather than later. They're within that executor's year. They're within that parameter where that money can be used for its greatest benefit, and we're not going to lose the benefit of that tax receipt. Those rules do change from time to time, so you need to get advice from a qualified accountant with regard to the details of that. But this may be a solution, not only for your planning opportunities where you can set this up so the executor has an easier job, but as an executor, you could say this is an option to be able to fulfill the obligations to give money to charities as part of the estate where they're not named, and there's a general direction to set up a donor advised fund. So good thoughts on that.
From an accounting perspective and efficiency perspective, the beauty of a gift in the will is that you can be used for up to 100% of income in the terminal year. It can also be carried back another year. So you can refile the previous year's tax return and use up to 100% of income in the previous year. So if there are large gifts to charity in the will coming from the estate, it can potentially impact 2 different tax years, which is wonderful. And while living, it can only be used up to 75% of taxable income. So that gives you a little bit more efficiency in the estate, so to speak, compared to giving now.
This has been certainly a great conversation, Ian. Gordon and I always learn something from our guests, and today is no exception. Before we depart, wondering if you had any stories from working with clients or any strategic giving plans that really made an impact on you and that you remember and share with other families.
Thanks for asking. Your stories are everything, right? Is what helps people understand what they can do and things that they may never have thought of before. Because we're talking about executors, that really stands out was a fairly large gift. About 2 years ago, we had an advisor bring a prospective client to us saying his father just passed away and he wants to make a very large gift to charity in his will. We think that a donor advised fund would be the best option in this case. It was an extremely large gift. That was what he was tasked with giving. $40 million estate, half of it to charity. So it's a $20 million gift for charity. So the beneficiary, who is the executor for his dad's estate, was quite anxious about fulfilling dad's wishes and thought that he would have to write potentially 20 $1 million checks to charity. And that was quite daunting because many of these are small charities that may have some difficulty receiving $1 million. And it might not be cash, it might be appreciated securities because that's an efficient way to give. And some of those charities might not be able to receive gifts of securities. So we were able to set up the account for him. So this is the executor setting it up. And we were able to receive gifts of securities, gifts of cash, and create a pool of charities that dad was really passionate about, and create a plan to not necessarily give it to them all as lump sums, start to work on a strategic way of getting that money to those charities through some multi-year gift agreements. So we worked with the donor and with a handful of those charities to draft 3 and 4 and 5-year gift agreements to be able to drip some of that money to them, but have the conversation. This is the big gift, and here's the path forward in receiving that gift. And it provided a lot of comfort for both the charity, that knowing they're going to get the large gift. They'd already talked to dad a little bit about the possibility of receiving a gift. So it wasn't a surprise they were getting something. So we maintained that connection to dad, but it really gave them a structure to be able to donate, get 1 tax receipt for the estate instead of potentially 20. And then have some investment management there to have some growth on the donated assets until such a time as they get to charity, but be strategic in not giving some of these small charities too much money yet. Created a dialogue between the family and those end user charities that became very beneficial, so that the charities got to know the executor. They got to talk about dad a little bit and why it was important for both sides that dad was doing what he was doing. So it became a really good news story. And I can tell you the executor is in a much better place, kind of emotionally. He had a very big job to do. This is a big estate. There were corporate structures there to deal with. There were cross-border assets. There was a lot going on. And then to throw on, oh, by the way, $20 million to charity, he was definitely overwhelmed and continues to be to some degree. But I think we've really lessened the burden for him. Having the language in the will, the ability for the executor to choose a donor advised fund can provide a lot of peace and helpfulness to the executors in many cases.
What a powerful story. And one thing that pops up is really peace of mind. I think that's invaluable when you're dealing with estates and losing a loved one and then having to navigate all these different priorities as an executor. So that's really great what you and your organization do. And we're so thankful that you came today. If any of our listeners would like to get a hold of you, how do they do that?
Anyway, phone, email, I'm happy to share those details with you here over the air or through an email. But if they'd like to reach out to me with thoughts or questions, I'm more than happy to field any and all.
We'll put your
Perfect.
contact information in the show notes so people can receive that. Obviously, lots of good information on canadagives.ca, your website. I was looking at that ahead of time, and there's some good general information. A good place to start. Search there to get some more information, and then obviously connect with you regarding specific questions.
Yes, definitely. Anytime. Thanks for accommodating that for sure.
Thank you,
Yes.
everyone. We'll see you again next time.
Bye-bye.